welcome to our investment series. Today we will talk about some new development in ETF, and we are very lucky to have Elaine Lam with us today. She is from Mirae Global X. Hello Elaine.
Glad to see you again, Alton. Thank you.
Let's go to our topic directly. I understand Mirae Global X previously has a dividend ETF, which is on Hong Kong stocks. With counter is 3110, and recently Mirae Global X launched another dividend ETF, which is an APAC, Asia Pacific High Dividend ETF. Can you let us know more about this new ETF?
Sure, Alton. So the Federal Reserve is fighting the inflation by increasing interest rates, and the market is uncertain with a lot of volatility. And a lot of investors are looking for more defensive assets, such as higher yield products. So apart from 3110 that you just mentioned, which is an ETF that focuses on Hong Kong listed high dividend yield stocks, we expand the coverage from Hong Kong to Asia Pacific. So we launched the new 3116 ETF, the Global X Asia Pacific High Dividend ETF, to meet the growing demand from investors. And by looking at the multiple years of history, Asian companies tend to pay out more to the market, and the dividend yield of Asia Pacific is actually higher than the rest of the world in general. So this is another reason why we launched this ETF.
I see. And why should investors invest in 3116 ETF? What is the distribution policy like? Because the theme is on dividend. So of course we want to know how frequent the dividend is being distributed, and what is the expected index yield.
Sure. So 3116 ETF is fully tracking the selective Asia Pacific High Dividend Yield Index. So as of June data, the index yield is about 8%, which is higher than the 3% dividend yield of Hang Seng Index, which is a basket of blue chips companies in Hong Kong, as well as higher than the 2.5% yield from the Hong Kong private residential rental. So this is quite compelling to the investor if we are looking at 8% index yield.
Because of the rate hikes in US markets, of course investors want to get higher yield return, and at the same time our investors is pretty smart and intelligent. They know that if we have a good dividend on one hand, but would we have a ETF price drop on the other hand?
Okay, that's a valid question. A lot of investors would concern from this aspect. So this is why we run a back testing, and by looking at the back history of this index performance over the period of 5 years, going back to 2017. This Asia Pac High Dividend Yield Index is actually outperformed the market, even though there are several rising rates regimes over the past 5 years, as it's outperformed the MSCI Asia Pacific Index as well as the US 10-year Treasury Index with an asset return of 7.3%.
I see. And let's go back to the index itself, because investors must know what the index is behind. So can you let us know more about the index methodology, like what exchanges in Asia Pacific, the sectors and things like that?
So again, this is a passively tracking ETF. Starting from the universe, the index will contain the stocks from 7 markets, including Australia, New Zealand, Japan, Korea, Hong Kong, Taiwan, and Singapore. So these are more mature markets with a dividend-paying history. These eligible stocks will be then ranked by their estimated 1-year forward dividend yield. But for those with dividend yield of 20% will be excluded, because we thought this is quite unusual. So, and then we will pick the top 40 stocks with the highest yield to be the constituents to form the basket. It is equally weighted at the rebalancing day of a 2.5% weighting, with a 35% capping on both sector and the listing locations to avoid the concentrations.
Oh, I see. And because this is a bit more technical, let me just repeat again. 7 exchanges from Australia, New Zealand, Japan, Korea, Hong Kong, Singapore and Taiwan.
Correct.
Okay, and then you mentioned the index itself is equal weighted, and there are 40 stocks. So when it comes to the rebalancing dates, each stock would be a weighting of 2.5%.
Correct.
And there is a cap on the jurisdiction and also on the sector. And the cap is 35%.
5%.
Oh, thank you. I learned something today. Okay, I got one last question. How about the top holdings? Because when you mentioned high dividend, we don't know what stocks it is actually. So what are the top holdings, the industry and the management fee, the dividend distribution frequency as well?
Okay, so in terms of the dividend distribution frequency, it is expected for 3116 ETF to pay dividend on a quarterly basis, providing a source of income for investors. And going back to the weighting and components of this ETF, there is a highest weighting in terms of the listing locations from Australia and Taiwan, with 28% weighting and 34% weighting respectively. It could perhaps due to the energy stocks in Australia. Energy sector is booming and making a comeback this year due to the higher oil and gas price as well as limited oil supply, so on and so forth. So if we look at the top 5 constituents, 3 of them are from Australia, including Whitehaven Coal Mining, New Hope Corporate, as well as the Woodside Energy companies. So these are Australian companies and they are from energy sectors. There are also Taiwan-listed technology stocks such as Quanta Computer and Japanese stocks such as Konica and Mitsui OSK Line. So these are top constituents and holdings in the ETFs.
I see. I think personally I see one more merit of this ETF because it covers the Asia Pacific and some names from Taiwan or Australia, even I haven't heard of it, but I think through this ETF, investor can have some holding into these good dividend paying stocks. And lastly, just let the audience know, 3116 is listed in the third quarter of 2022.
Yeah, July 27th.
Oh, that's
this
good.
year.
And then the stock price now is about $55 Hong Kong per share, and the one lot is 50 shares. So the minimum investment amount is around 2,006 Hong Kong dollar. I think it's a pretty low minimum requirement. And by the way, comes to the end of this investment session, and may audience please be reminded all kinds of investment, whether it is stocks, futures, options or ETF, all of them have a certain level of risk. So be careful when it comes to your own investment decision. Thank you, Elaine.
Thank you, Alton.